Hi everyone, this is Stephen. Welcome back to Wealthy Education's Technical Analysis course. We're here in Module 2, looking at technical indicators. And today we're going to be talking about the Relative Strength Index and how to trade the Relative Strength Index. The RSI is a momentum indicator that measures the magnitude of recent price changes to help identify overbought or oversold conditions. So what we're looking for is a change in trend when we're looking at the Relative Strength Index. The formula for the RSI is RSI equals 100 minus 100 over 1 plus relative strength. This is with a 14-period default time frame. So it's either 14-day, 14-minute, or 14-hour. It doesn't matter. The RSI works in all time frames. The values for the RSI range from 0 to 100, with 70 being overbought and 30 being oversold. So anything over 70 or below 30, we're looking for a trend change. Since RSI is measuring recent price, it is also a momentum indicator, just like our other EMA indicators and the MACD. The RSI indicator can give false signals, just like we saw with the MACD in our last video. And so some traders use the numbers 80 and 20, so above 80 and below 20, and only take signals generated with those parameters in order to avoid false signals and overtrading with the RSI. Again, the RSI is an indicator that's best used with candlestick or other chart patterns to deliver the best results. So let's take a look at a few charts using the Relative Strength Index. Let's take a look at the stock of Walt Disney on a daily chart using the RSI. So go up to Indicators, type in RSI, and we see the Relative Strength Index comes up. Close this box. We see the Relative Strength Index is located on the bottom of our screen. These are the levels we talked about, 70 to the upside and 30 to the downside. We can see first off that the Relative Strength Index doesn't give a lot of signals. We have a buy signal here, here, a couple of sell signals here, here, and then later in the chart. But it mainly trades in the range between 70 and 30. So let's take a look and see how the RSI worked with Disney. So on this buy signal in May of 2017, the stock did trade up slightly, but then turned back down. Kept trending down. We didn't have another buy signal until September. And at this point, the stock traded in a pretty tight range for a couple of months. It put in some major support at these levels. So a buy here would have worked. We wouldn't have been stopped out. And then the stock went into an uptrend. We had our first sell signal here in November, and then our second sell signal. Now note this one is at the 80 level that I said some traders use, so they don't get false signals with the RSI. And if we had sold at this level near the top, near 110, the stock really didn't trend that much higher and then turned down. So this RSI indicator of an oversold condition was correct. The stock traded down, and we get another overbought condition here in June. The indicator was correct. The stock trades down a few percentage points and then trades back up. And right now, Disney is trading in an overbought condition. And something to note, the overbought condition, as again I said we should use the RSI with other indicators, that overbought condition also happens to be around resistance for the stock. Now let's take a look at the RSI on a shorter time frame. So let's look at RSI on an hourly basis with Deere. Again, there are not a lot of signals, but we get an overbought signal here on the 9th. If we had sold out of or shorted our position at that point, the RSI was correct. We get down into an oversold condition here on the 13th. Again, the RSI calls this one correctly. The stock moves up. A slightly overbought here, but not really peaking out very much on the RSI. Not much of a signal there. But the stock does drop and we don't get another signal, we get close to overbought a couple of places as the stock is trading in a range here on the 26th, and here on the 7th, the stock does turn down at this point, and we get several oversold indicators in a row here, another one here, and you'll see a divergence here. The indicator isn't dropping as much as the stock, which is lower. So the indicator, the RSI, is lower here when the stock is at 136, and then turns up and it's higher when the stock is down at 134. So that would be a more bullish indicator than just the RSI signal by itself, but taking a couple of signals together. And then we get a nice move up in the stock after this signal. Again, the RSI should be used in combination with either other indicators or with chart patterns such as candlestick patterns, which we'll be talking about in the next module. So that completes Module 2 on chart indicators. And as I said in the next module, Module 3, we'll be talking about chart patterns and candlestick patterns. I look forward to seeing you there.